Some people are talking about this because it's such a big number. It makes me believe that the Fed will lower rates to prevent this from happening because the numbers are so big. You can't have 1.2 trillion in debt come up and have that start to default, because if that whole US commercial market starts to turn, it takes the whole globe down. Because if ours is the largest commercial real estate market in the world, and if the largest market in the world starts going into the black hole abyss, down the toilet bowl, it'll suck everything else with it. The Fed can't have that happen. Therefore, they lower interest rates. Therefore, and I hate saying this, we could see threes again. You could see 3.5 because of things like this. I don't want that to happen. I want the Fed to stay tighter for longer, but the math says that's a possibility that we could get 3.5 to 4% debt again.
Remember, they said there's no way they could actually go to 5, 8, and 10% long term, because ultimately there's even bigger debts. Okay, so think about this pattern. Residential, Great Recession, we saw what happens.
Yes.
If this happens in commercial, way bigger, it could be a bigger problem. And they're going to follow the playbook they think worked before. But everyone knows it's kind of kicking the can down the road, more specifically to what? Government debt, which is even bigger. And you even said one of the reasons they can't let too big to fail happen is because we would affect the whole world. Hence why we saved ourselves in 2008 and in a way during the pandemic, and now with commercial.
Yes.
And then what about government debt? This is the demise of the dollar. It's highly likely that commercial debt will experience some turmoil, which would force interest rates down. Couldn't government debt eventually do the same thing?
100% it could. Follow the bouncing ball rolling down the hill. That's the analogy. And the analogy is that as the ball bounces and rolls down the hill, it picks up speed. So the government is spending like a bunch of drunken sailors, and they've been spending like drunken sailors since COVID. And if they don't get spending under control, because right now spending is at 115 or 120% of GDP. In other words, we're spending way more than we're taking in a phenomenal economy. So if commercial real estate starts to become a problem, which it appears it's headed so this is the Titanic headed towards the iceberg. We know it's headed that way. You can see it in the math. Then money printer they got to turn it on. Problem when they turn on the money printer, the debt goes up. And if government, politicians in general, can't control that spending, and someone doesn't stand up and make a stand for stopping the drunken sailor spending, then what happens is that spending becomes too much, it's too big of GDP, and then no one buys our debt, and then interest rates rise, and it's just game over. Like you and I, we tried to sell on the way out and just moving somewhere. Mm-hmm. But that's really where this goes to. The current level of taxation is too low for the amount of spending we're doing, and spending is increasing too fast relative to the productivity of the United States. So it's unpopular, but some politician somewhere has to start cutting something from spending. And I'm to the point where, because I see the numbers, just go 1% across the board, 2%. Just make a flat cut to everything. No special favors, no negotiation back and forth. Don't waste a bunch of time. Just go cut 1%. And if that worked, great, cut another. And then we can figure it all out. So the upcoming challenges that it's facing is we got the 1.2 trillion of debt that's maturing in 2024 and 25. 25% of that is in the hard hit categories of office and retail. According to Moody's Analytics, the national office vacancy rate right now, as of their last reporting, was 19.2% in Q3 of 2023. Almost at the historic high. The historic high is literally 19.3. So we're 0.1 away from the worst office vacancy rate ever. What this is doing is this is increasing the risk for banks and for those commercial mortgage-backed security instruments that we were just talking about. What that's doing then is this is causing financing costs to rise and actually just surge dramatically, which will increase the losses on commercial real estate. So you have to hit a tipping point here. You can't keep the debt really high and not expect the commercial real estate market to not slide off the other side. So the debt has to come down. The Fed has to lower these rates to buoy up that market. Who are maybe some of the biggest political donors? Are they people who own commercial real estate?
Yes.
And then do maybe politicians themselves be the type of people who would invest in commercial real estate?
Well, Nancy Pelosi's like a mega millionaire.
She's the best stock picker of all time, as far as I can tell. What this is going to lead to is those low cap rates, increase debt service coverage ratios, which creates that possibility for the cash in refi. Okay, so I want to go back to the numbers in our example so people have got this in their head again. In the Seattle Metro, we were just at an average of a 4 cap in the area. So if we assume $100,000 in net operating income and you divide it by a 4 cap, so 100,000 divided by 0.04, that means that building was just worth $2.5 million. In 2024, a lot of assets are now trading at a 5.5 cap. So if they had to sell today, or the bank's looking at refinancing them, they're assuming it needs to now operate at a 5.5 cap. So they're going to take that same 100,000. Let's assume their expenses didn't go up, but we know their expenses went up because of inflation. So we know this math is even wrong. Take that 100,000 divided by 0.055, and the asset is worth roughly 1.82 million. So they lost almost 700,000. So when you go to the bank now says, wait a second, we need a higher debt service coverage ratio and your financing cost is higher. So you might have to bring in on that $2 million asset, you might have to bring in another 10 to 20%. That's 200 to 400 grand. So now if they don't have it, what do they have to do? They've got to sell the asset. They've got to bring on other investors. They have to do something. Who's at the biggest risk? These smaller regional banks hold 5 times more commercial debt than the larger banks, than your Chases, than your Bank of America. So what's Chase doing right now? They're licking their chops and say, come on, Fed, higher for longer, and I'll take the next bank that goes under. Give me your next Silicon Valley bank. I'll take it.